Hey investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about SoFi. So this is a follow-up to last week's article where we talked about SoFi and talked about what would happen if SoFi got the bank charter approval. So that's what I want to talk about. Uh, it's kind of like this is a two-sided argument. So this investment is, as it was last week, is far from just an easy layup. So there's a lot of different outcomes that can happen here, but everything kind of centers around how will investors perceive SoFi's business model. Will they be willing to give it a higher multiple? How high? Or will they say, okay, that whole strategy about it going from being a super app is actually no, they're really just a bank with a digital services business attached. So it's kind of like that's all. There's so many different angles here, and on the other side of the equation, the stock is down approximately 40% in the past several weeks, and the share price has been at that high point several times in the past year. So there is the argument that the risk reward right now is more favorable than it's been for a while. So I mean, the stock is up about 15 or 16% after hours. And again, this is really the graph. You can see how so volatile it has been for investors. It's just this stock has been really, really difficult to hold. And everyone would have just kind of given up. The stock is trading towards all-time lows. Everyone's despondent and everyone's frustrated. 2022 starting fresh. Everyone wants to just clean out their portfolio and start with something new. And I can see all those arguments, and that's why, as a new investor coming in, you got the bank chart approval, you got a lot of different levers that the business can go with. I think that this could be quite interesting for new investors coming to the stock. Now, last week I said that the stock is cheaply valued at 24 times this year's EBITDA if SoFi gets the bank chart approval. However, if it does get the approval, it's going to put more restrictions on its balance sheet, and that will impact its ability to be nimble and opportunistic going forward. So that's really what I want to continue, right? So as the announcement came out yesterday, they're going to deploy 750 million towards Golden Pacific Bank. So again, it's the balance sheet was already far from being nimble, right? So they already carried approximately 2.7 billion of debt, and yes, they did have some about 500 million of cash, but for all intents and purposes, we have a business here that has more than 2 billion of leverage. Now, think about this in this way. So its its ability to be nimble is going to and make new meaningful acquisitions is going to be really restricted, right? Because you've got a leverage balance sheet. On the other side, you have to consider the bullish angle, right? So the business is clearly growing quite rapidly. So its guidance for Q4 is pointing to approximately 55% year-over-year growth rates. 55% year-over-year growth rate. Those are not small numbers. Now, you have to think about also that the Galileo acquisition took place in mid 2020, so that they're more than lapping that period already. So what you see is what you get. This is organic growth. So Barry is saying, oh, SoFi, it's just a bank, it's just a bank. There are not many banks that are growing at 20% year over year. There are not many banks that are growing 30% year over year. So to be putting out, 55% year over year against a really high comp against last year, I mean, so bearish argument is kind of like one thing, but you have to kind of ground that on reality as well. So it's kind of like, yeah, I don't really see that side of the bearish argument because, a rose by any other name smells just the same, right? So, it's a bank or not a bank, but it's growing really rapidly. So it's kind of like banks don't really grow that quickly. Even if they're neobanks, they typically don't grow that quickly. So that's the other side. Now, the stock is cheaply valued because before last week, we're kind of looking at this and saying, oh, if it gets a chart approval, now we know it gets a chart approval. So for all intents and purposes, it's more likely than not that SoFi is going to get the EBITDA is going to reach approximately 440 million to 450 million, right? So in that ballpark, okay? So it has a really huge explosion relative to the same period a year ago, where last year they made the results haven't come out yet, but approximately let's say 40 million of EBITDA. So to go from 40 million of EBITDA to 440, that's 10x in a year. So of EBITDA. So that's like wow, that should be taken into consideration. Now, this implies the stock is priced at 23 times EBITDA. Okay, this includes the after hours job. Now, whatever your stance, this is a rapidly growing business. There's no getting around that. Now, the other thing that I have to think about is the balance sheet is quite leveraged, right? So you have a business that carries approximately 2 billion of net debt, and then possibly if they have to send out 750 million towards the bank arm, that's going to make it even more leveraged. Probably you come in into approximately 2.5 billion of net debt, something like that. So are you going to be really willing to pay 40 times EBITDA for SoFi? That's where the plot thickens slightly. So here's for some context, right? Just because something is a financial services business doesn't necessarily mean that you're going to get a really high multiple. Consider this, right? So since I started following Robinhood, I said that Robinhood had too much risk and too little upside. I wrote that article, and the stock is down approximately 68% since I previously wrote that article. So it's just because something is a fintech business or something, like that, doesn't necessarily mean that the market is going to be willing to embrace that narrative at all costs. Okay, so the big difference between Robinhood and obviously and SoFi is that SoFi is a more diverse business model. SoFi is already profitable. SoFi is growing. SoFi is not contingent on the Dogecoin, how that performs. So there are many different angles here that they're not really comparable. But I'm just giving you this point of view that the market isn't that keen to embrace just about any narrative. Okay. Now let's go back to basics and think this through, right? So what's the most important thing that you as an investor can do? The single most important thing you can do as an investor is to avoid losing capital. If like you, that's really rule number one: don't lose capital. Because if you lose capital, you can't keep playing this game, and if you can't stay in the game, you can't survive the game, you can't compound, and you don't want to interrupt your compounding. Okay, so that's the first thing that I wanted to highlight. The second thing that I think is quite important is that you should avoid long shots, right? Because long shots become no shots. But you and I shouldn't really stand here and pretend either that that this business is anything but what it is. It's a tough call to make. There are many different outcomes that can come out. Now, the charter, bank charter, has been approved, but the actual underlying outcome that will come over the next 12 months is just really as muddy as it was, right? So it all comes down to whether or not investors are going to be willing to pay a high multiple for their business, which could be seen as a bank or could be seen as a super app, and if investors give any credence to that side of the equation. So I don't know really how everything is going to unfold right here. It's a very interesting investment. I'm really following it very acutely because I also have some investments in fintech. So it's going to be really interesting that how Q4 comes out in a few weeks and what they talk about as its guidance. So in any case, if you want to find out what kind of names I'm buying right now, don't forget to check out my marketplace. It's called Deep Value Returns. You can see what other people said, check out my reviews, and yeah, come in and drop me a line, and I highlight for you high quality, actionable investment insights. Thank you so much for listening. See you soon.